it down in the comments. And before we get into the video, just a real quick disclaimer that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my recommendations, just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. Okay. What I'm going to do in today's videos, we are going to talk about the market correction that is starting to occur. We're also going to talk about what is a market correction, what is a market crash, how many corrections have we actually had this year. There is a lot of confusion out there about the difference between a market correction and a market crash and how many we've actually had and whether or not we're still in the same one from March. So we're going to talk about all that and just clarify everything for you guys. Before we do that, I'm going to do a completely reverse order this time, and I'm actually going to go over the stock pick first. Now, a lot of YouTubers talked about a lot of different stocks today, but the reality is they just mentioned the same stuff we've heard 100 times on this channel. And so what I'm going to do instead is I'm just going to cover the one stock that's actually new and has new information. So let's get into that first. And that stock is going to be, pull it up. Right there. That stock is going to be GENI. And so real fast on GENI, this is Genius Sports. And you know StockMo really likes gambling stocks. He decided to start dollar cost averaging into GENI on Monday and Tuesday. Now he's already lost quite a bit of money because this is an absolute falling knife right now. And he said that he admitted this is a falling knife. He just said he's going to continue dollars cost averaging it anyway. Now, personally, I would wait for this thing to bottom out and show a sign of rebounding. And what would that look like? Well, first of all, we're probably going to get down to at least a 300-day EMA before we bottom out. Now, what is a rebound? Now, a confirmation of a rebound is two things. One, this little bronze line on my chart is the 10-day EMA. I'm looking for the candles to start closing above the 10-day EMA. The other sign of confirmation, what's called a golden cross on the MACD. And a golden cross is when this gold line crosses above the blue line. Let me show you what that looks like. So back here, we have a gold line cross above the blue line. That's called a golden cross. We also, the very next day, we saw the candle close above the 10-day EMA. And so that's confirmation of a rebound. Now, that doesn't mean it's going to happen immediately. We did go down the next 5 days, but after that, we absolutely started to go back up. And you can see little rebound, but then after that, it went right back up. And so then you had this reverse pattern. This is called a death cross when the gold line crosses below the blue line. And then you also had, check this out, we had a candle close below the 10-day EMA. So the day the candle closed below the 10-day EMA is the same day we had a death cross. That is confirmation that the rebound or reversal has happened once again, and we're going to start going down. And that's where you got now. You're just going straight down. And so that's what I'm looking for. I'm looking for this to get back above the 10-day EMA. I'm looking for a golden cross. Those two things happen. That'll be confirmation of a rebound. That will be the time to start dollar cost averaging into GENI. But I wouldn't do it yet. I feel like you're just going to lose money. However, once this does actually bottom out, the average analyst one-year price target is $31. It's an 82% upside from Tuesday's closing price. So there's a lot of upside potential on this one once it does bottom out and start going back up. Okay, now let's talk about what is a market correction, because I want to clarify that for you guys. There's been a lot of confusion out there. So let's get into that. Okay, market correction is just a technical term in the markets, right? A market correction is a fairly specific type of drop. It means a drop of at least 10%, but less than 20%. So more than 10%, less than 20%. That's the definition of a market correction. A market crash or a bear market is when we go down more than 20%. That's when we enter a bear market. And then anything less than 10% is a dip. So I think 0 to 9% is a dip. 10 to 20% is a correction. 20% or lower is a crash. So those are just technical terms in the market. So what do we mean when we say that the stock market has not had a correction since October of 2020, October of last year? We say the stock market hasn't had a correction in 11 months. What are we talking about? Because for a lot of you guys in your portfolios, you guys are down a lot since March and you've never recovered. I mean, let's take a look at this. We've got, if we look at the charts in some of these stocks, like BNGO, right? Had you bought BNGO back in the highs of March, you would have bought it around $15 and you would still be down at this point. I mean, we're still trading like in the fives, right? This is just, whoops, sorry. This is just crazy right now. You'd be down a lot, still down 60%. SOS, it was at 15, it's down the twos, still down a ton. MARA was at 57, it's at 37. You'd still be down a ton. So I can certainly understand the confusion in the comments where a lot of people think we've been in a market correction since March that we've never recovered from. But let's take a look at just the technical definition. We're going to take a look at the Nasdaq first, then I'll look at the S&P, and we'll look at the market corrections that have occurred. So let's start with the Nasdaq, which we're going to look at the QQQ, which is an ETF, Nasdaq ETF, to kind of look at this. And guys, if you have any questions, be thinking about them. We're going to take a look at the comments here. What we're going to do right now is I'm going to pull up the calculator, and we're just going to calculate if we've had a market correction or not. And so I want to go back to this March period that everybody kind of talked about, okay? And in this March period, let me pull up that calculator again, 1 second. Okay, so let's take a look. We had a high of 338.9, and we had a low, it looks like the low probably occurred here, 297.45. Now the difference is $40.74. If you divide that by 338.19, we have a drop of 12%. So yes, the Nasdaq absolutely corrected in March. And then look what happened. It rose, it rose, it rose, right up until the beginning of September. Nasdaq hit an all-time high. So yeah, a lot of the stocks that you may have been invested in have never recovered. But when we talk about the stock market itself, the Nasdaq fully recovered and actually went on to hit a new all-time high. Now, let's take a look at the S&P. Let's see when the last correction was on that. Now, you might think that same March time period, a lot of people were talking about that. So let's go take a look. And if I'm going to pull up this calculator once again, and we have a high, it was probably right here. High that day was 394.17. The low looks like it was right here. The low that day was at 371.88. Difference of $22.29 from the high of 394.17. It was a drop of 5.6%. That's just a normal dip. That's not a market correction. Remember, a market correction is at least 10%. And so what we're seeing here is that we did not get an actual correction in the S&P. When was the last correction in the S&P? Well, you have to go all the way back to October of 2020. Now, there was actually two corrections last year. There's one in September and another one in October. And I'll show you that. So over here, we had a high this day of 354.02. So yeah, 354.02. So let's do that. 354.02. The low was right here of 322.60. And based upon the high, 354.02, nope, that was only 8%. It wasn't even a correction in October. I think it was back here though. 358.75. 319.80 divided by 358.75. Yeah, 10%. So actually, the S&P has not had a correction since September. It's been 12 months since the S&P had a correction. And here's why that's so important. The stock market normally will have a correction, that is a drop of more than 10%, 3 times a year. We have not had one single correction in 12 months. So that is why we are significantly overdue. And you scammers, I hate you guys. I hate scammers. Guys, don't ever, ever reply to these scammers, please. Ugh. I'm just going to go remove them now so they don't show up in the replay here. Ugh. If you hate scammers, just comment below. And this is why I hold all of the comments on YouTube, is to stop these scammers, because it is just ridiculous. They recreate my page. They just, it's awful. Okay, got rid of the scammers. There's all our blocked people. All right. So before we go any further, I just want to ask you guys if anybody has any questions about the difference between a dip, a market correction, and a market crash. So go ahead and put it in the comments. I'll give you guys a few seconds. And I just want to make sure that we're all clear on that, so we don't get any more confusion. That's really why I wanted to do a live video today, is I wanted to give you guys an opportunity to kind of interact so that we could see, just make sure everybody's on the same page here. And while you guys are doing that, I'm going to go through all these old comments here. I just want to make sure that I didn't miss anything super important. Oh, I did. Okay, back in the previous one, we had a super chat for $1. Thank you so much, Kimberly, for the super chat. I really, really appreciate it. Oh, looky here. Another super chat for $1. Thank you so much, Mono. I really appreciate you. You guys are awesome. Thank you guys so much. It's a nice thing I can even see it from the last one that didn't work out. Okay. Thank you guys. I really, really appreciate it. Let's go see questions. All right. Can you speak of the timeline of when you see the correction starts and ends? So let's go look at the... I guess what you're asking is, when do I think this correction is going to start and end, or when I know. You don't know. You just don't know. Like every last dip, you just never know. Was this going to turn into a correction? Was that going to turn into a correction? Was that going to turn into a correction? What about that one? That one? That one? That one? We don't know. The reason I really felt like this time would be a correction is because it was very different. First of all, just historically, September and October normally correct. But take a look. Notice, remember I said that a reversal is when we have the 10-day EMA cross below the 21-day EMA? Watch this. We dipped. We did not get across on the EMAs. We dipped. We did not get across on the EMAs. We dipped. We did not get across on the EMAs. Dipped, did not get across. 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 Dipped. Ooh, right there. We had a crossover of the 10-day and 21-day EMAs. That right there was different. That has not happened since the last correction. And that is why I was pretty certain that we were going to correct. On this day, when I saw that crossover of the 10-day and 21-day EMAs, this is when I loaded up on puts. And the very next day, we just killed it. This is when I was up like, what was I, up 60% that day or something? Because it was just such a clear sign to me that we were going to correct. And man, it hit hard the next day. Haven't really made a lot of money off the other puts that I bought, because I added more puts right here when we closed below the 100-day EMA. I thought we were just going to go on down to the 200, and instead we went up and then down and then up. So this sideways action that we've had is just, it kills puts. I'm losing money to theta right now, but we're still bearish. And the reason we're still bearish is, for one thing, we still are nowhere close to a golden cross here. But more importantly, the candles are still below all of the 10-day EMAs. We actually had a nice bounce off of the 10-day EMA today on SPY. And so this is still quite bearish. It looks like it just wants to keep going down. We're down 0.17% in the after hours. And then I think I can pull up the futures for you guys. And let's see. The ES is the S&P futures. And right now on this, we can see that we are down 0.55%. We're down over 0.5%. YM is the Dow futures. We're down 0.43%. And NQ is the Nasdaq futures. We're down 0.62%. So usually the futures will rebound at midnight. And so we'll see if the futures rebound at midnight. We are about an hour away right now from midnight. So we'll probably get a rebound. I don't think we're going to open like down 1% or anything. We'll probably open a lot closer to flat. But right now it's looking really bearish. So it does look like we'll probably continue this drop downward. And that's why I'm holding my puts that expire October 15th. That's next Friday. And I really think we're going to get down to this 200-day EMA. So hopefully that answered your question. Let me see what other questions we have right now. 1 second here. Okay, let's see. Do I think the reason we haven't had a correction is because of all the money that they have printed? Yes, absolutely. That is the reason. Close. Dip is less than 10%. Correction is 10 to 20. Crash is more than 20. Let's see. How long do crashes last? So a correction will last on average anywhere from 2 to 6 weeks. A crash will last anywhere from 1 to 18 months. So anywhere from 1 month to a year and a half. And prior to the crash in March of 2020, prior to that crash, the shortest crash we had ever had was 6 months. And so prior to March 2020, all crashes were between 6 months and 18 months. That 1 month crash was extremely unusual. David, you were the man. Thank you so much for the $10 super chat. I really, really appreciate it. Milo, thank you so much for the kind words. I really appreciate you. And Rich, thank you so much for the super chat. Thank you so much for watching. I really, really appreciate you. You are amazing. Most likely never. She's very private. She does not like to come on camera, but she actually she has a very public role. Actually, she's been on she's been on a lot of news networks talking about different topics. So you know, if I think most recently she was on Fox News like 3 times last year, as well as a bunch of other stations. You've probably seen her, even if you don't know who she is. So I'll just leave it at that. Let's see. What is your chart lines on the bottom to make it go? Okay, that is called a MACD. In Webull, to turn on the MACD, it's really simple. You have this indicator thing right here. And then one of them is going to say MACD, and that's MACD. And you just off, on. You just click it. All right, let's see. I'm not going to go over any stocks today. We're just going to do the market correction stuff. And then I've got a prediction for the rest of this week based upon the action that we're getting right now. Let's see. Do you see the possibility for a crash in the near future? So maybe. Right now, I'd still say unlikely, but maybe. Here's the thing. The reason we are even correcting right now is because we had the government spending issue where we were going to, the budget expired, and so they have delayed the budget through the end of November, which is just a temporary Band-Aid. But the much, much bigger issue is the fact that we have the debt ceiling limit. So the United States, we're running a deficit right now, meaning we're spending more than we actually generate in taxes. And so we have to borrow money in order to pay all of our bills. And the United States is going to be out of money, completely bankrupt on October 18th. So we're about, 15, 16 days away from the United States becoming bankrupt. And so, well, no, less than that. What are we, tomorrow's the 5th, so 18/5, so 13. We're 13 days away from the U.S. becoming bankrupt. And that's obviously a pretty big deal. The last time this happened, we didn't actually, we fixed it, but we came really, really close within 3 days of going bankrupt. It was in August of 2011. And we fixed the issue, went up for a few days, and then Standard & Poor's downgraded the U.S. credit rating, and the stock market dropped 5.6% in one day. And so this is a really big deal. We could see huge, terrible ramifications for the U.S. economy if the Standard & Poor's downgrades us again, which they might if we get really close to our deadline on this debt limit increase. Now I'll give you a quick update on that because this is really important. So when it comes to the debt limit increase, we have it's really, really political. So as far as actually fixing it, it could be done within one day. All they have to do, Congress just goes in and they say, hey, we authorize the U.S. to go into more debt. That's it, done. The problem is right now we have Democrats who are in control of the House, the Senate, and the presidency. And Democrats don't want to raise the debt limit because it's going to be political suicide the next time we have an election. Republicans are just going to come out and they're going to be like, look at the Democrats, they put us in this ton of debt, vote for us instead. And so Democrats don't want to do that. They want this to be bipartisan, meaning that Republicans and Democrats work together. Problem is Republicans know it's political suicide for Democrats, so they're not helping the Democrats at all. They're like, no, we're not going to vote for this. Now, the issue is here in the United States, in our Senate, we have to pass bills by a 60% majority. And Democrats only have a basically 51% majority in the Senate. So we can't get any bills passed because Republicans refuse to help. Now, there is another process that they only require a 51% majority, which Democrats have, and that's a process called reconciliation. The problem is the reconciliation process can take up to 2 weeks to occur. And even if Democrats use reconciliation, they're still going to be the ones to actually raise the debt limit, which they don't want to do because of the political suicide. So it's just this, the Democrats are really stuck right now in a really tough situation. They have to raise the debt limit. They want it to be bipartisan. The Republicans aren't helping. They don't want to do it because it's political suicide. And the economy in the United States is going to suffer massively. And the stock market's going to suffer because of all this political nonsense. And that's the gist of it. That's what's going on. The problem is they already said the reconciliation process can take up to 15 days to actually go through. And it's the only option left on the table unless somehow they convince Republicans to get on board. They have to do reconciliation. They haven't even started. We're 13 days away from running out of money and reconciliation takes 15 days. You do the math. It's a terrible situation. And so if that occurs, if the U.S. runs out of money, if we go bankrupt, if we can't pay our bills, yeah, we're going to enter a crash. Also, on a side note, let's just say we do fix this and we are able to pay our bills. The Chinese economy is just tanking right now. They are one of the largest economies in the entire world, and a drop in their GDP, a drop in their economy, a recession in China, it will affect the entire world because exports are going to go down. That's going to hurt GDPs. People who are invested in China are going to lose a ton of money. They're going to have to sell assets in Europe and the United States in order to cover their losses and cover margins. That's going to cause a downward pressure in asset prices in both Europe and the Americas. And so, yeah, that's another thing that could cause a market crash. So we have those two things there. Right now, I think it's all going to get resolved, but it's certainly a possibility. I'd say maybe a 10% chance of a crash right now. Okay. Yeah, I sold my Shiba today. Just a heads up. I had $75 in it, but I put $75 into it like last week and sold it today for $175. Like, I'm good. I made plenty of money. I think it's going to come back down. It went up because Elon Musk bought a dog that looks like the Shiba dog. Literally, that's it. That's why it ran up. It's so ridiculous. Okay, here's a good question. When I look at EMAs, do I look at the 1 day, 5 days? Okay, the answer is everything. I look at 1 minute, 5 minute, 1 hour, 1 day, 1 week, and 1 month. But 99% of my analysis is based upon the 1 day. All right, let's see. Any other market stuff? Oh, Uneducated, thank you so much for the $2 super chat. I really appreciate it. Like I said, I just sold my Shiba. I think it's going to tank just like Dogecoin did when it ran up to 70 cents. Let's see. Any other market stuff? Oh, yeah, inflation, which in turn could lead to rising interest rates. That could also cause a recession, which could also cause a market crash. But that's more of a 2022 issue. Most economists, we think the stock market might only go up by 2 or 3% the entire year in 2022 because of the rising inflation and rising interest rates. So I don't know if it actually causes a crash, but it's definitely going to cause a slowdown in the economy. No doubt about that. Pro Poker, thank you so much for the super chat. I love DMAC. What's your opinion? I have no idea what DMAC is. I'm sorry. I haven't looked into it. Uh, can you do a video on how to do a basic technical analysis? I hear you talking about MACD rising RSI indicating oversold going to. I just did. I hope it helped. Let's see. If the market does crash, what happens next? It goes down by 20%. We recover and we go back to new all-time highs eventually. Okay, good. I'm glad we're doing the live stream. Let's clarify this. So you say Democrats don't want to raise the debt limit by themselves because if they do, they can't do their $3.5 trillion human infrastructure bill. So there's two different ways the Democrats can do reconciliation to get this passed as far as raising the debt limit. First of all, the debt limit has nothing to do with spending. I want to be very clear about that. These are two completely separate issues. The Democrats have two options. One, they can do a separate reconciliation bill just for the debt limit increase. But again, they don't want to do that due to the political suicide. They are thinking about doing a separate reconciliation bill for a debt limit extension, basically meaning you can just continue to borrow indefinitely for another 2 or 3 months and we'll figure it out later. They're thinking about doing that. But the other option is that they can attach, through reconciliation, they can attach a debt limit increase to the $3.5 trillion human infrastructure bill. The problem is there's certain progressive Democrats that don't want to do that yet because they're still negotiating it. They're still talking about it. They're still trying to figure out the whole thing out. They don't want to rush this bill through. So they absolutely could attach the $3.5 trillion spending bill to the appropriations bill, which would be the debt increase limit, and just combine them all together. It's already in reconciliation, so that's something that would work. But progressive Democrats so far don't want to do that. I think they've had like 3 votes on this already, and all 3 have failed. But they're trying. They really are trying. Okay, let's see. Scott, I really appreciate it. Just a quick baby update. Baby has not been born yet. Once the baby does come, I'm probably going to be offline for about a week. So just a heads up on that. Ocean Translator, GOP doesn't want to raise it because a crash would be blamed on DNC as a total failure. That's absolutely correct. Yes, they are. Republicans know that Democrats are in control. They know that anything that happens with the economy or the markets is going to be blamed on Democrats, and so they are not going to help Democrats at all. The Democrats are in a terrible situation. They're either going to have to increase the debt, they're going to have to increase spending, they're going to crash the market, crash the economy. Whatever happens, it's bad. It's bad for Democrats, and Republicans know it, and so they're not doing anything because they just want Democrats to take all the blame. So yeah, you're absolutely correct. Right, Patrick's correct. Absolutely. Okay, let's see. All right. Oh, Rich, thank you so much for the $5 super chat. I really, really appreciate it. Best inflation hedges. Uh, so inflation hedges, banking stocks are going to be our best inflation hedge. And the reason is as inflation goes up, the Fed is going to have to raise interest rates. The higher interest rates are going to mean more profits for banks. And so your best hedge is going to be your financial sector, your banking stocks. Other good inflation hedges are things that people have to buy and they just absolutely cannot go without. And so those are going to be your brands that do consumer goods that people have to buy. And then the pharmaceuticals are also going to do extremely well during high inflation because people have to buy medications. They don't care how much they cost. And then the other thing that's going to do extremely well are deep discount retailers, your Walmart, your Dollar Tree, things where people are running low on cash and they need money and they just can't buy from normal retailers. So they go for the cheap guys and they go buy cheap products from places like Walmart and Dollar Tree. So those are all inflation hedges. Hopefully that helps. And thank you again for the super chat. Really appreciate it. All right, let's see. Good question. Do you use stop limits on option plays? No, I don't. I have them mentally, and they're always a technical thing, but I don't place them. The reason is because the bid-ask spread on options, especially in the first 2 minutes of trading, is extremely wide, and I would get stopped out all the time. So no, I do not set them on options. I have them in my head, and I watch my options like a hawk. Good question. Does investing in growth stocks make sense with inflation next year? Yeah, they're already beat down. I think it's fine. Small caps are already really beat down. They're actually at really good, cheap levels. I have no problem buying into them. I don't think inflation, I don't think any stocks are going to do extremely well next year. I think it's going to be a slow year, but I think long term, the high growth stocks will do well. Okay, Mai, thank you so much for the $2 super chat. I really appreciate it. Thank you very much. Bank exposure to China, not a concern. So far, every single bank has claimed that they do not have exposure to China. Now, I don't know how much of that I believe, but that's what they're claiming. I think it's going to be a lot like Archegos Capital, where like once they lose the money, they're going to come out and be like, oh yeah, we didn't have any exposure, but we just lost $15 billion. Like, I don't know. We don't know. Until they say, we just don't know. Let's see. Christy, yes, I agree with stock mode. The markets, I don't think are going to do well next year due to inflation and rising interest rates. Oh yeah, Patrick, energy stocks. Yeah, that's another good inflation hedge. They've obviously been running up a lot lately because of higher inflation and again, people got to buy gas. They got to get to work. You're going to be paying for energy no matter how high it goes up. So energy is another good one. All right, guys, I think that covers everything. I'm just going to do a quick prediction on the markets for the next few days, and we're going to call it quits here. So real fast in the markets, what I see is I see us still below the 10-day EMAs. I see us continuing to correct until we get some sort of appropriations bill passed, whether that's a separate appropriations bill or it's attached to the $3.5 trillion spending bill. One way or another, we've got to get that thing passed. Otherwise, we're not going to see a rise. Now, once that does pass, we're going to see a massive rise. I mean, we're going to go on a new bull run, and we could end this year at new all-time highs. Just keep in mind that we do have the possibility of another second correction at the end of November, beginning of December, if the government shuts down. Remember, I said appropriations and spending are two very different things. The debt limit increases are immediate concern, but the spending, the Democrats just kicked the can down the road on that one. And actually, it was bipartisan. The Republicans and Democrats both agreed to kick the can down the road. They're going to revisit that at the end of November And so at the end of November, they've got to come up with a new spending bill. Otherwise, we're going to have a government shutdown, and that could cause a second correction in the markets end of November, beginning of December. But for the rest of this week, what I think is going to happen is we had this down day, a little bit of an up, a down, a little bit of an up. I think we're going to have another down day down to this like 425 level again. And then Thursday, probably up. Friday, probably down. I think we're just going to kind of do this little zigzag pattern here a little bit as we just slowly go down over the next week and a half. I think we're going to trade, not too far down this week because President Biden's really pushing to get this appropriations bill passed this week. I don't think it's going to happen. I think come Monday, when we still don't have an appropriations bill, we're still running into this Friday deadline. I think next week is we're gonna see this thing fall down that 200-day EMA pretty fast. So that's just my prediction. Again, day-to-day predictions are a complete gamble. I can base this upon a lot of experience and a lot of history, but that's why I did a 2-week option on this, because day to day I have no clue what's going to happen. I just know that over the next 2 weeks we're probably going to go down. And so this is a swing trade for me. I can pretty well predict the swing, but it's really hard to predict day to day. I thought we were going to be fairly flat today, and wowzers, we were not flat at all. We were big time green. I mean, look at this 1%, 1.25%. Like, that's the opposite of flat. So I did not expect to rebound that big at all. I thought we were going to be flat. So you can't predict day to day. Just go for your swings and figure everything out. Okay, guys, we're done. Thank you so much for joining me. If you haven't already, make sure you hit that like button, subscribe, follow the page if you're watching on Facebook. And if you're on YouTube, make sure you click the bell icon next to the subscribe button. If you're on Twitter, you can click the bell icon as well to get your alerts. That way you don't miss any of my videos or alerts or live videos. Thank you guys so much. Thank you for all of the super chats. I love you guys. You guys are amazing. You guys just bring me so much joy. And I hope this video is extremely helpful. I'm going to try to get back to regularly scheduled programming after this. I just want to do a live video to answer all your questions. Have a wonderful time trading. I wish you guys a ton of success in the stock markets, and I will see you tomorrow.